All right, traders, how are you, Trader O here? Why don't we talk about the US dollar, right? So, a big week ahead. On Tuesday, we have the federal funds rate decision, and it is expected that the Federal Reserve will hike interest rates by 75 basis points to 4%, right? Hiking interest rates, of course, bullish for the currency, and I have been bullish on the US dollar for a while now. I have been trying to buy dips, and the reason that I haven't traded the USD for a couple of weeks now is because of this range, right? This choppy range. We're looking at the 4-hour chart on the DXY, and this choppy range was extremely unprofitable to trade, right? Now, I wasn't going to trade the downside on the USD because if you look at historic price action or past price action, the impulsive moves are to the upside. So why would I want to trade a choppy pullback in a very bullish market? Now, having said that, I am looking for further upside on the USD. Now, also, the reason why I wasn't looking for trades at the highs is because going low at the highs of the moves when there's ton of lack of bullish momentum and price creating new lower highs is also unprofitable in the long term, right? Now, what I saw last week, at the end of last week, is the US dollar breaking with these previous lows, and most importantly, with these previous lows, right? Now, this, my friends, is extremely bullish to me, and let me explain to you why. So basically, what I'm looking at here, let's go to the 5-hour chart. There's absolutely no reason why I'm going to the 5-hour chart. This is just to have the entire historic price action in front of our eyes, right? So basically, what I'm looking at here is this. This, my friends, is just liquidity, sell side liquidity being taken out, right? Now, this by itself does not mean we have a reversal and we should be buying the US dollar because the current or the immediate structure on this market is still bearish. But also, what I saw is this, right? Price reacting to this level of demand. Now, why do I know that this is a level of demand? Let me show you, right? I just plug my volume right here. Well, I can't plug it here because there's no volume on the uh, financial product that I'm looking at right now, but there is accumulation of buy volume within this range, actually here, right? Now, and that accumulation of buying volume created that break of the structure, right? A break of the previous highs. Now, the first flag for looking for longs next week is this, right? The bear trap at that liquidity sweep, then price reacting to this level of demand, right? And also, if you look at historic price action, we also have a very important key pivotal level historic price action. Right here is where we saw sellers jump in and where we saw buyers unable to swipe all the sell orders that were in place here. And then this is where we saw that accumulation of buy orders to move price up in the US dollar for about 5%, right? So, what I'm looking at next week, right? I'm looking for buys on the USD. This by no means, I don't have a setup at the moment, but everything is pointing out at possible buys. So if we look at the hourly chart in this market, right, the immediate structure is still very much bearish, right? Price creating lower highs and buyers unable to break with these lows. Now, let me just delete this to be a little more accurate in my levels. Now, the level that I would be looking for there's two scenarios, right? Let me just delete this. There's two scenarios, right? Should the DXY open lower, I will be looking for buys at I'm sorry, at the previous lower time frame area of demand. So if you notice here, what happened is that we saw the last break of the structure to the downside. Let me just rub my brush here. The last break of the structure to the downside here, then this should mean a break or a change in the character of this market, right? Now, most often than not, right, weak longs or weak buyers in the market are going to get stopped out before price continues to the upside. Should it continue to the upside, and this liquidity sweep in the market creates a very, very interesting and potential high probability longs at the area of demand that created that break of the structure, right? So the first probability, or I'm sorry, the first scenario would be a deep buy towards the 110. But if this market opens very bullish, right, and opens above the 111.50 and holds this level, this is where I will be looking for longs again. And as you know, I'm only looking for longs in this market. And after Friday's bearish breakout, taking out all the deep buyers or all the weak players in the market that were trying to um, catch the move at the highs, I think the probability of this dip buy is quite good. Now, should price or should the US dollar open lower, or should the US dollar open wherever it opens, right? But continue to continues to break with the lows, that would mean that the pullback structure is still very much in play. That's why at the moment there is no setup, because either price would break with the lows, which would mean that the pullback or bearish pullback in this case, right, is still in play, or we will find that dip buy, which will mean that we are right about the pullback being over. So stay safe and